Dear clients, I'm Richard, Phillip CFD dealer. With the shifting of the geopolitical limelight onto the simmering tensions in Iraq, the second largest OPEC producer, last week's market actions would come as no surprise, as market participants pull back for equity markets in favor of alternative assets. For instance, crude oil reached a 9-month high over fears that the violence in the Middle East country could spread south towards Baghdad, capital to 3/4 of Iraq's production capacity. Gold also climbed for the second straight week as the escalating violence in Iraq boosts demand for the precious metal as a safe haven. Hence, we need to keep a watchful eye for any game changer that could emerge from the Iraq situation should it morph into a serious energy disruption crisis. If such a dire scenario materializes, it would ignite market concern of a global inflation scare that threatens to derail the global economic recovery and or shake policymakers off their policy accommodation stance. Next, on the US economic front, a broad range of indicators from manufacturing output to services sector activities to employment have suggested the economy has rebounded from a winter slump, although the housing market remains a weak link. For example, early this week, amid the latest US inflation data upside surprise, the US dollar marches higher alongside an increasing treasury yield, and encouragingly, the US equity market also rose in tandem from last week's low, implying that a firming price environment is being viewed as a bullish economic confirmation rather than as a headwind. On the other hand, separate reports from the World Bank to the IMF provided downside revisions to their 2014 global growth forecast, which cast some doubts over whether will the US spring thaws foster into summer blossoms. At this juncture, I believe that the key questions on market participants' mind is that against several cross currents as mentioned above, could we continue to count on policymakers' assurance that the global economic recovery will stay on track? Well, seems like so far this week, prior to the conclusion of the June FOMC meeting, and in spite of unabating Iraq violence headlines, cross-market actions are indicating that market participants remain optimistically hinged onto renewed policy accommodation commitment. Indeed, at the conclusion of the June FOMC meeting yesterday, Ms. Yellen's strong emphasis on a patient and gradual forward policy guidance dovetailed well with market expectation for continued Fed's accommodative stance, which should help to underpin market sentiment in the near term. However, looking forward, there is an unsettling sense that the Fed is somewhat in denial mode about the improvements in recent inflation and employment data. Therefore, a market risk does exist in that Fed might have to lean towards a more hawkish stance in the coming meetings should these underlying economic trends continue, or risk themselves being left behind the curve. Clients may consider using Phillip CFD to trade equities and indexes across markets to capitalize on trading opportunities in both rising and falling markets. In addition, you may also trade based on different strategies using many more benchmarks which are available with Phillip ETFs. Look forward to Monday's weekly Market Watch, where the topic is posted on PhillipCapital's Facebook page. We want to hear from you. Any questions, any comments on Monday's topics, please drop them via Facebook and Twitter. Talk to Phillip. Thank you for watching this week's Market Watch. I'm Richard from Phillip CFD. Tune in next week for more Market Watch videos.